Are you tired of watching your money slowly disappear while so-called investors seem to get rich overnight? If that sounds familiar, you're not alone, because chances are you're making the same mistakes that 90% of beginners make. But don't worry. In this video, you'll understand why beginners lose money so fast, the mindset that separates winners from losers, and simple steps to turn even $50 into a smart start. Now, let's start with the first mistake, and it's the most common one of all. Most beginners start investing without a plan. They throw money into apps, follow random tips, and hope for the best. No goal, no strategy, just chaos. Here's the truth. Investing without a plan isn't investing. It's gambling. A real plan always has three things: a clear goal, a simple strategy, and a timeline. For example, Emma invests $50 every week into random stocks she hears about online. The result? She's stressed, confused, and slowly losing money. Jake, on the other hand, invests $50 a month into a simple index fund strategy. His money grows steadily, and he barely thinks about it. And here's something that surprises most people. Even small amounts of money need a plan. Randomness is one of the biggest silent killers of beginner investors. Now let's move on, because the next mistake happens almost every time someone sees a trend. Mistake number 2 is following the crowd. Beginners chase hype. A crypto is mooning, a stock is trending, everyone is talking about it, so they jump in without thinking. But investing isn't a popularity contest. Hype usually burns small investors the fastest. Take Tim as an example. He buys a trending crypto with $50. The hype fades, the price drops, panic kicks in, and he sells at a loss. Here's the twist most beginners don't expect. The biggest opportunities usually appear where most people aren't looking. And now, let's talk about a mistake that seems tiny, but slowly destroys your investments every single month. Mistake number 3 is ignoring fees and costs. Small fees don't look dangerous at first, but they quietly eat your gains over time. Trading fees, commissions, subscriptions, they all add up. Imagine Anna investing $50 a month. With a high-fee broker, after 1 year, she ends up with $45. With a low-fee platform, she ends up with $53. That difference doesn't seem huge until you realize fees compound just like profits. Beginners almost always underestimate this. And when you combine mistakes 1, 2, and 3, even smart investments can fail. So now that we know what not to do, let's talk about how winners actually invest. Smart investors keep it simple. They plan their strategy. They ignore hype and focus on steady growth. They use low-fee platforms. They automate their deposits. And most importantly, they practice patience. Here's a real example. Lily invests $50 every month automatically. No hype chasing, no stress, low fees. She forgets about it, and 5 years later, those small investments turn into real wealth. And here's the secret most beginners don't believe at first. Small, consistent actions beat risky moves almost every time. Now let me share a strong habit that changes everything. Think long-term. Most beginners think short-term. Markets are noisy. Trends come and go. If you react to every headline, you lose. Long-term winners do the opposite. They ignore the noise. They invest consistently. They reinvest their profits. And they let time do the hard work. This mindset alone separates winners from 90% of beginners. Beginners fail because they invest without a plan, follow the crowd, and ignore fees. Winners succeed because they plan, ignore hype, automate their investing, keep costs low, and think long-term. So stop guessing, stop panicking, and start investing smart. Even $50 can grow if you follow the same rules real winners follow. If you're ready to stop losing money, like this video. Subscribe for more videos like this and comment below and say, "I want to win." See you next time.